The VIX hit its lowest level in 16 months today, and some investors are worried it's a sign the market has become too complacent. Does it mean a major correction is on the way? Well, let's bring in Jeff Weiss, Chief Technical Analyst at Jessup and Lamont, and Yu-Dee Chang, Principal at Ace Investment Strategies. Gentlemen, thanks for your time. Yu-Dee, let me get to you first of all. How is the VIX speaking to you right now?
VIX right now is telling me that the market is indeed a little bit complacent and maybe is ready for a correction. I'm not calling for a bear market, but for a correction maybe. Over the history, VIX tend to trade into ranges. Right now, we're at the lower end of the range.
Jeff, you don't feel that the VIX has such a predictive quality?
Well, Amanda, in my experience, no, because I believe a bull was born, a bull market that is, back in the late July, early August period, and a lot of that had to do with the S&P doing something that in the past has been a wonderful indicator, and that is the S&P at the end of July at 987 closed above its 12-month moving average. So while clearly there are more bulls around now than there were, and sentiment has tilted bullishly, as your guest has mentioned, the key is not what people are saying about the market, Amanda, but what the market is saying about itself through its underlying technical structure.
Yu-Dee, Jeff was just telling us there that he's watching the 12-month moving average instead of the VIX. How does the 12-month moving average, do you think, stack up against the volatility index?
Absolutely. I think it's a timing issue. Just because we're in the bull market doesn't mean that the market wouldn't be going through so-called pullbacks, and that's what I'm talking about. When you have really low volatility, usually that means the market has been in a nice and smooth uptrend, and usually that's when the traders gets a little bit to be a little bit more complacent and is ready for a correction. That's what we're talking about. I think if you're talking about the moving averages on a trend following longer term basis, no doubt about it, it's a very good tool. However, for a shorter term on a trade by trade basis, moving averages actually are not a very, very accurate indicator.
Yu-Dee, you talk about this correction. Can you just quantify it? How deep exactly do you think it is? When you think that actually since March, we haven't really had a decent sized correction at all, have we? Do you think that we could be overdue for one?
Yeah, I think so. If you look back in the performance of the S&P 500 basis, basically the bull run started back in March of last year. And since that run, we had about 4, let's call it pullbacks. That's about 5% or more. The deepest being the one in June of about 9% or so. And the last one that we had was back in September. And it's about 5% or so. Each one that we had is about 5%. So it's about time. We're about, almost 4 months into this bull leg again. I think from the way the market was, especially based on the price action for the past, I would say 3-4 weeks, the market's getting a little tired to me.
So, Jeff, how do your views jive with those of Yu-Dee's with regards to whether or not we're overdue for a correction?
Well, I would point out 2 things. Number one, if you would look at the 3 signals, for lack of a better word, Amanda, that the S&P has given versus its 12-month moving average, there were over 1,500 net points gained, and that does not include the rally from 987 so far. What's more, after the 2003 April signal at 916, the market stayed above its 12-month moving average for 55 months in a row. Now, shorter term, I do a lot of work with trend lines and a host of other indicators, and that suggests to me that I'm using the 1105 area on an intraday basis as initial S&P support, no matter how many bulls and bears there are.
Yu-Dee, just my last question very quickly. If indeed there is a correction, I mean, nothing goes up in a straight line, what would you be doing right now? Would you be taking profits? Would you be reallocating? How would you be protecting yourself?
Yeah, I probably wouldn't be reallocating. I probably would take some profit off the table and raise a little bit of cash. And after that correction, I would say maybe a 5% or so correction, I'm actually getting ready to get back into the market, because over the longer term basis, I'm actually bullish on the market.
Gentlemen, thank you very much for your time.
Thanks, Amanda.
Well, we're about 11 minutes. Yeah, about 11 minutes away from the closing bell.